Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 29th, 2025, and we're diving into the first quarter earnings report of Enterprise Financial Services. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Enterprise Financial Services has just released their Q1 2025 results, and there's a lot to unpack, from their net income performance to strategic acquisitions.
Revenue and profitability overview. Let's start with the top line. Enterprise Financial Services reported a net income of $50 million for the first quarter of 2025, with an adjusted earnings per share of $0.31, beating the forecast of $1.17. John, what does this tell us about the company's profitability?
It's a strong performance indeed. The adjusted EPS of $1.31 not only surpasses the forecast, but also shows a significant improvement from the prior year. This is largely driven by a robust net interest margin of 4.15%, which indicates effective management of interest-earning assets and liabilities.
How does this compare to their previous quarters?
Compared to the linked quarter, the EPS increased from $1.28 and from $1.05 in the prior year quarter. This consistent growth highlights their strategic focus on enhancing profitability through efficient balance sheet management.
Operational efficiencies and future outlook. Moving on to operations. Enterprise Financial Services reported total loans of $11.3 billion and total deposits of $13 billion. They've also announced a significant branch acquisition. Can you elaborate on these developments?
Absolutely. The increase in total loans by $78.4 million from the linked quarter reflects their strong loan origination capabilities. Meanwhile, the acquisition of 12 branches from First Interstate Bank is a strategic move to strengthen their market presence in Arizona and Kansas, which should support future growth.
What impact do you foresee from this acquisition?
This acquisition is expected to enhance their deposit base and provide new growth opportunities in these regions. It's a clear indication of their commitment to expanding their footprint and leveraging new markets for sustained growth.
Asset quality and risk management. Let's discuss asset quality. The report mentions non-performing assets at 0.72% of total assets. How does this reflect on their risk management?
The increase in non-performing assets is primarily due to a few specific commercial real estate loans. However, the allowance for credit losses at 1.27% of total loans and a provision for credit losses of $5.2 million indicate that the company is well prepared to manage potential risks.
Is there any cause for concern here?
While the rise in non-performing assets is notable, the company's proactive approach in maintaining a healthy allowance for credit losses suggests they are effectively managing their credit risk. The loans in question are well secured, which mitigates potential concerns.
Leadership insights and strategic initiatives. John, what insights can you share from the leadership's perspective, particularly from CEO Jim Lally's statement?
CEO Jim Lally expressed optimism, highlighting the positive start to 2025. He emphasized their proactive balance sheet management and strategic initiatives like the branch acquisition. Additionally, the increase in quarterly dividends to 30 cents per share and a $10.6 million share repurchase reflect their commitment to returning value to shareholders.
How do these actions align with their long-term strategy?
These actions demonstrate a balanced approach to growth and shareholder value. By increasing dividends and repurchasing shares, they are reinforcing investor confidence while strategically positioning themselves for future expansion.
Key takeaways. In summary, Enterprise Financial Services has delivered a strong performance in Q1 2025 with impressive earnings and strategic growth initiatives. John, any final thoughts on their investment prospects?
Enterprise Financial Services is well positioned for continued growth, with a solid financial foundation and strategic acquisitions. Their focus on enhancing shareholder value through dividends and share repurchases makes them an attractive investment option.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Enterprise Financial Services performance in the comments below.